All right, good morning everybody and welcome to another Facebook live session. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. If you guys can hear me out there, before we go ahead and jump right into things today, let me know in the comments that you guys can hear me. Let me know that the audio and video is coming through for you. Once we have confirmation of that, we'll go ahead, get right to it here today. For anybody new just tuning in for the first time, to give you a little insight in how the kind of flow goes on here is first we start to take a look at what's happening in the market today, and then we jump into our topic of discussion. So today we're going to be looking at some industries, how to find the hottest industries out there, and how to find some of the best stocks in those industries for you to take advantage of to make easy money in the markets. And then as always, we do save the fan favorite to the very end, where we'll analyze any stock that you want to take a look at in less than 30 seconds. Actually, more realistically, less than 10 seconds. So if you're wanting to see your own stocks analyzed, see how they rank in the VectorVest system, make sure to stick around to the end. And as always, before we get started, make sure to hit that like button, hit that share button. All of that helps me out, doesn't cost you a thing, and helps continue to grow this awesome community that we've built here over the last few years here on Facebook. So, you guys are saying everything is coming through good for you, so awesome. I love seeing that. Let's go ahead, jump right into it, take a look at what's happening this morning, and then we'll start to dive into some other areas here today. So right now, the market is 2 ticks into the red. Therefore, we're somewhat bearish, and VectorVest does not advocate buying any stocks at this time. As always, if you're a VectorVest subscriber, you can watch the daily market update where we recap what's happened in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, just watching this 5 to 10 minute long video on a nightly basis will make sure that you never get caught off guard with what's going on in the market and you stay on top of things here. If you're not already a subscriber and you want to see that, click on the link in the description of today's video and you can sign up for a 2-week free trial and get started right away with it. So as we scroll down here, we take a look at the color guard. Now the color guard is what we use to analyze the overall market. And we use 3 main indicators on that. First is price action. This is looking at the price of the VectorVest composite. So the VectorVest composite, if you're not familiar, is an arithmetic indexed average of about 8,500 stocks, I believe, currently. And this gives us a better representation on what's actually happening in the market because it's not just looking at the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,500 stocks all into one. As we can see, it's red today since we're lower on a day over day and week over week basis currently. The next indicator we look at is the RT or relative timing. It's cast on a scale of 0 to 2, and it's looking at the short-term price trend of the overall market here. So at 0.94, that tells us the short-term trend is down. And since it's red, it's moving lower day over day and week over week. So we're getting more confirmation or stronger push that the market is not only down, but it's starting to pick up a little bit of momentum here, which is something we need to definitely keep our eyes on. Then after that, we get the BSR, the buy to sell ratio, which is looking at the number of buy rated stocks in a database, the number of sell rated stocks in a database. So above 1 tells us there's more buys than sells, and below 1 tells us there's more sells than buys. At 1.01, we're basically break even to the number of sell-rated stocks, the number of buy-rated stocks out there currently. And then these 3 indicators are comprised to come up with the MTI or the market timing indicator, and this is looking at the underlying trend of the market. It's cast on a scale of 0 to 2, and above 1, the underlying trend of the market is up. Below 1, the underlying trend of the market is down. So at 1.06, the underlying trend of the market still remains in the up situation currently. 8703, Mark said. Awesome. Thank you for that, Mark. So after the MTI, we then get the trend column, which is really showing 2 parts of the trend each and every day. The first part is referred to as the primary wave or simply the weekly trend of the market. As we can see, it is currently down since we're lower on a week-to-week basis currently. The second part is looking at the underlying trend once again, which is just simply reiterating that MTI we just went over. And since the MTI is above 1, the underlying trend is still going to be in the up situation. And then last but not least, we then get the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. So as you can see, we still remain in a confirmed up situation as of today. Also, good morning, everybody. Thank you guys for all tuning in. Good morning, Kathy, Mark, Michael, Larry, Abdul, Julia. Good morning. Hopefully you guys are all doing well. Thank you guys for tuning in. Glad to have you guys all here today. All right, so last but not least, we do like to take a look at the advanced declines every single week because this really tells us if it's a good day to buy or not a good day to buy. The advanced declines is looking at the number of stocks moving higher compared to the previous day and the number of stocks moving lower compared to the previous day. So when the market's moving higher, we want to see at least twice as many stocks moving up than moving down. That way we know the probabilities are in our favor that we're going to be buying a stock on that day that is moving up with the overall market, and just as opposite for when the market's moving down. So today we have the market moving down, and right now we're sitting at about 30% of stocks moving higher and just shy of that 60% of stocks moving lower. So just below that 2-to-1 ratio that we like to see, but that could definitely change by the end of today, which we'll take a look at and keep a close eye on here. And then, as always, looking at the major indices, the Dow is up about 0.1%. The NASDAQ, which has been one of the hardest hit indices really over the last few months, down about 0.5%. S&P down about 0.1%. Overall, the VectorVest composite, though, down about almost 0.7% here today. So aside from the Dow, we see all the major indices are in the red and showing some weakness so far. All right, so now that we know what's going on in the market right now, let's jump into our topic of discussion. And that's how to find big winners utilizing hot industries. Well, VectorVest has always put our main focus to make it easier than anywhere else out there to find stocks that you want to be getting into. And today, this is no exception. So over here on the left, I have the stock pick ideas, which if we just simply go to that, we get a few different categories here to help you find stocks that you'd be interested in. So if you're a momentum player, you have hot stocks here. If you're more conservative, more long-term minded, then obviously retirement stocks is going to be the right place to go. Then right below that, we have the hot industries. These are going to be the 5 fastest moving industries at any given time. This will change throughout the day, throughout weeks. Over time, these will rotate in to show the hottest at any given point. I do have Tim coming in with a question. Let me make sure I like to answer everybody's questions. So if you have questions, as always, leave your questions in the comments. I do read those. I try to interact with you guys. So if you do have questions throughout, any stream that we do here, always make sure to put those questions in the comments. I'd be glad to answer them for you. What do I do to get started? Already have it installed on the app and logged in. So what do you want to do to get started? One of the best places, Tim, that you can go, just to get off topic for a second, we'll come right back to this, but there's a brand new section under the stock market training, and you have the whole new education section that we talked about a few weeks ago. In this education section now, which everybody should have, if you guys have your app pulled up, let me know if you don't. I saw an update, and I want to make sure that it was the actual update, which should be live now. And one of the best things to do is simply go through the quick start course. You have, I believe, 5 or 6 series. It's all free here. You have other free topics or videos to help you get started or help you get more knowledge on the markets. But this free course is going to really help, get you familiar with what's going on and get you familiar with how to really put or how to get the most out of the app for yourself. So that would be my first recommendation. It's just simply starting off in the education section there and going through the quick start course that we have built in for free for you. First step videos are fantastic. Awesome. Thank you for that, Kathy. Glad you're enjoying them. All right, so let's get back into it for today. So taking a look at some of the hottest industries. So if anybody was in, I already see a few familiar names, but if anybody was tuning in yesterday over on our YouTube page, we had a hot stock panel, And one of the main industries that that we had stocks from was building residential, that type of industry so far. And that's because there has been, a shortage in lumber. Lumber prices have been skyrocketing. You've seen the headlines about it left and right. So therefore, these stocks have been heating up and heating up quickly, giving you guys a great opportunity. Even with the market the way it is, and with all the fear that we've had over the last few weeks going on in the market, these stocks have still been continuing to go higher, continuing to make money, which, with what's going on, it's hard to find those kind of stocks right now. Luckily, VectorVest has it all in one spot for you. Could we be looking at a confirmed down at the close? I don't believe so, John. I'd have to go back and double check, though. LPX needs to pick up. Yeah, LPX has been one of our top stocks for a while, though. All right, so looking at the first one, LPX here, it's down a little bit today. Market's down a little bit. That's fine. Let's go ahead and analyze this together. So we'll go to the View Full Stock Analysis Report. As always, you can get the description of what this company does, where its headquarters is at, that kind of useful information. Basically updating you on, a little bit of information about the stock. And then below there, we get the summary breakdown so far. So right now, it is rated to buy. The value is currently 110.40, where its price is at 67.79. This tells us that this stock is undervalued, aka you're getting a bargain for this stock right now. And who doesn't like getting a bargain? Looking at the relative value, which is looking at the long-term price appreciation potential of the stock. Since these are all on a scale of 0 to 2, the next three indicators we're going to be looking at, anything above 1 is going to be good. Anything below 1 is going to be bad. So with RV at 1.77, that's excellent on a scale of 0 to 2. So good long-term potential with this stock. Next is RS, or relative safety. This is looking at the consistency and the predictability of a company's financial performance. The easiest way to remember it, though, is it's simply an indicator of risk. So above 1 tells us that there's less risk associated with this stock compared to the average stock out there. Below 1 tells us that there is more risk associated with the stock compared to the average stock out there. So this one has an RS rating of 1.42, which tells us it has less risk compared to the average stock. And then third is RT, or relative timing. The relative timing is looking at the short-term price trend of the stock. Once again, on a scale of 0 to 2, above 1 tells us it's in an uptrend, below 1 tells us it's in a downtrend. Now, the thing that makes RT more unique than just your average momentum indicator, your trend indicator out there, is it's not only just looking at, is this stock going up or going down, but it also tells us the magnitude of that move. So since it's on a scaling of 0 to 2, above 1 tells us it's in an uptrend. The closer to 2 it is, the stronger that uptrend is, or the more momentum behind it, the bigger the magnitude essentially. So at 1.75 tells us it's in a really nice strong uptrend right now. And then these three are comprised to come up with our master indicator, VST, standing for value, safety, and timing, the VST vector essentially, which is how we got our name. And this is a unique indicator because it gives you a great overall view of the stock from both a fundamental and a technical basis, all wrapped into one. Something you're not going to find anywhere else out there. So with a VST rating of 1.66, that's extremely strong on a scaling of 0 to 2. And now one other indicator I will highlight here today, because I know a lot of people out there enjoy it. I personally enjoy looking at this indicator, and that is the comfort index, or the CI. The comfort index is looking at the stock's ability to withstand severe lengthy price declines. Basically, it's the snapback factor. It's not, it's more of a technical indicator. It's not really a fundamental indicator, but essentially, if the stock pulls back, the stocks with the higher CI tend to rebound and hit those new highs very quickly. So with a reading of 1.82, that's extremely strong here as well. So even though it's down here today, that tells us with a CI of 1.82, it has that ability to snap back and continue to move higher very quickly and recover, any losses that it had. LPX just reported earnings, and I've not checked for sure, but I think they beat. I would be surprised if they didn't, Kathy, to be completely honest. Glenn's educational videos are available in the archives. There you go. So I see a lot of people have gone through some of these education videos. So I'm glad you guys enjoy those. I'm glad you guys are getting the benefit out of them. And thank you guys for the positive words on that. Hopefully, for anybody new coming in, tuning in here today, you may be lurking in the background. You see that. Hopefully that'll open your eyes to take a look into it and see how powerful the tools can be for you. All right, so that's our first one, LPX, great stock. Yes, it's down a little bit here today, but as always, we said don't buy here today anyway. So if you're not already into it, you're waiting for that better buying opportunity, which we'll put there right for you on the homepage so you can get that information quickly and easily to make sure you're buying at the right times and not buying at the wrong times. Or you're not buying at the wrong times. Yeah. All right. So we've got that UFPI, another one that's extremely powerful, extremely strong here. Look at that 1 year graph. If we go pull it up real quick, just maximize it here so you guys can see a little bit better out there. You see a nice steady rise from bottom left to upper right. And we'll go ahead and put it on the 1 year. RT continuing to pick up this stock, barely any volatility, just a nice steady rise. I have on here, I think it's a 40-day simple moving average. And 40-day simple moving average has been an excellent indicator, as we've talked about in the past, to help identify when a stock is, looking strong or when you start noticing some weakness with it as well. One thing I do want to come up here to do is change that lower indicator to EPS or earnings per share, because these stocks aren't just, a pump and dump essentially. These stocks are not the stocks that you're going to be getting into just to day trade essentially. These stocks are going to be swing trade or even potentially long-term trades as well. So looking at the earnings per share line, a nice steady rise from bottom left to upper right like a stair-step pattern, which tells us, as we've talked about in the past, not only is this company making money, but they're expected to continue to make money at least 12 months down the road, which, as the old saying goes, money goes where money grows. All right, so we've got that in here. Both of these stocks look phenomenal, and that took, all of 3 or 4 minutes just to go find them, do some research on them, find out what the company does, find out about their fundamentals, their balance sheets, and off to the races. All right, we do have a question that I want to make sure I address. Becca's asking, so if the stock says buy, but the market says bearish, we shouldn't buy? Becca, that's a great question. I'm glad you asked that. No need to apologize. That is a great question. The answer to that is simply yes. And I state this all the time, but market timing, which is what we see here on the homepage, trumps any individual rating on a stock. This is why this is the very first page that you see when you sign into the app, the desktop, whatever you're getting into. This is why we put this information first and foremost, is because this is the most important thing that you need to be aware of before you make any decisions in the market. So, a simple way of thinking about it is when the market's moving higher and we say it's a good time to buy, we obviously recommend to buy buy-rated stocks. And when the market is falling or the market is selling off, we recommend to sell sell-rated stocks. So hopefully that simple explanation will help clarify that. But yes, you are on the right path. You have that thought process down 100%. Even if a stock has a buy rating and the overall market is saying do not buy, we simply hold off and wait for a better day to buy. That easy. That's as hard as you need to make it. I've seen it over the 10 plus years I've been here now. People try to overcomplicate it and overthink it, and it's really not needed. You don't need to do that. All right, so we've got building wood products as our number one industry. We found some great stocks. You guys have seen these stocks recently as well, with especially LPX. The next one we're going to take a look at is building residential. So a few of the stocks that we looked at yesterday during our hot stock panel came from this specific industry. DHI was one of them. Also Pulte Homes, PHM. But you can see all of these stocks are phenomenal. If we go through, All of them have VSTs well above 1.5 even. Starting off with the very first one, LGIH has good long-term potential. You have less risk associated with it, a strong RS rating. You have a really nice strong uptrend. It's even going against the market here today and moving higher with an RT of 1.86. Overall, VST 1.65, extremely strong here. You're welcome, Becca. Thank you for tuning in, by the way. We appreciate it. And, glad you're here. And we want to help you get on the right track and get the most out of what you have here at VectorVest as well. All right. So let's go ahead and get to the next one. DHI. D.R. Horton. If I'm not mistaken, this is the #1 home builder out there currently. I know this because I've been looking at selling our current home and moving into a new home. We've been looking at potentially new construction. That's pretty much all you can find here around Charlotte. Nobody wants to sell their current home, so all you can really find is new homes. And D.R. Horton is by far the #1 home builder, at least in our area, that we can find. And you look at the fundamentals, you look at the analysis of this, and you can see why. RV or long-term potential at 1.71, extremely strong. RS at 1.53, extremely strong. You have RT of 1.65, nice consistent uptrend. Overall, of course, the stock is favorable. Really appreciate it, Gage. How did we get here? Yeah, Tim. That's where we've been going over. All right, so with that being said, all of these stocks, easy to find. All we had to do is right when we pulled up the app, we clicked on the stock pick ideas, and it instantly took us to the hottest industries. We clicked on which industry we wanted to take a look at, and we get the best stocks right at the top of the list. Now, this is a great way to, do your analysis, and it's going to really save yourself a lot of time out there. Most of the places you go when you pull up a basket of stocks or you click on an industry, they sort it by alphabetical order. They sort it by, price or ticker symbol or, some way of just categorizing them or alphabetizing them. Not here at VectorVest. Because we have the VST indicator that helps us understand these stocks from both a fundamental and a technical basis, VectorVest does all the work for you. So when we go here and we look at the hot industries, and let's say we tap on building paint products, for example, instantaneously, we will automatically bring the best stocks to the top of the list and the worst stocks in this industry to the bottom. So therefore, you're not having to go through and spend a lot of time figuring out which is which. Start from the top, work your way down. If you start at the bottom, you're going to be looking at one of the worst stocks in that industry. And their mantra here at VectorVest is to buy rising stocks in a rising industry in a rising market. Simple as that. So you're getting not only the best industries, but also the best stocks in those industries at any given time. And just a matter of seconds, to be completely honest. All right. So here we have Sherman Williams. As we can see, it's also up here today, up 0.69%, which with what's going on in the overall market, I'll take that. That's a win here today for me. Looking at the analysis on it, though, you have good long-term potential. You have less risk associated with it. You have a really nice, strong uptrend. Overall, this stock is definitely favorable. For anybody who's been here for a few months or a few weeks even, or been here in the past, and stuck around towards the very end where we analyze your own stocks, you'll notice a lot of those stocks are stocks with an RV and RS below 1. The timing may be hit or miss. VST may be flat. In a matter of seconds, we will not only help you find those stocks with the good momentum or those strong pushes to the upside that you want to jump on board with that can help you, really get the most bang for your buck essentially, but also find them with good fundamentals as well. There's this common thought that you have to take on a lot of risk to get a big reward. Here at VectorVest, we try to squash that theory and give you the best of both worlds. Give you stocks that have good fundamentals and that have good strong uptrends as well. So that way there's less risk associated with it, and you can find stocks that, you don't have to take on more risk than what you're comfortable with to get the reward you're looking to go. All right. All right, so we've got that here. Let's see. How do I get it on my so all you have to do, Tim, just to kind of answer that. Hopefully, if you guys came in late, just to show you, just to quickly recap how easy it is here. So when you first sign into the app, this is the screen you see, the home page here. All you have to do is go to the stock pick ideas over here on the left. And then, as always, you have the hot stocks, retirement stocks, and we're looking at hot industries here today. These will change periodically as the industries change themselves, but there you will always be able to find the 5 hottest industries at any given time. And so all we did is once we got to the hot industries, we just simply go through them, and you can see they're automatically defaulted to bring the best stock in that industry to the top of the list and the worst stock in that industry to the bottom of the list. So therefore, we do all the heavy lifting for you to make your decision process faster and easier than anywhere else out there. So we were just going through some of those. Last, we just looked at the building paint products. We have business services, and then we'll take a look at that one here as well. And then we'll take a look at the last one for today. So business services, we have Americo. Once again, good long-term potential, less risk associated with it. You have a nice steady uptrend. Overall, this stock's definitely favorable still. Taking a look at the 1-year chart real quick, we can see a nice steady rise in price from bottom left to upper right. We look at the earnings, steadily rising as well. Everything you want to find a consistent winner can be found right here in a matter of seconds. If we go back out of here, there we go. Let's go to the next stock, General Finance. So this one may look like a buyout if I'm not mistaken. Whenever you typically see that flat line like we see here at the top of the graph, that tells us most likely that somebody bought the or is in the process of doing a buyout. Price moved that high because that's probably what somebody was willing to pay for each share, and then the price moves sideways. So when you see something like this, simply move on to the next one. No need to spend a lot of time doing or looking at that. All right, so next one, HRI. A nice steady rise in price, earnings, looking a little iffy, 6 months ago, but really starting to pick up now. You see a nice steady rise. You do have a little bit of a resistance level. Let's see, right, where is that? Right there, right, based off those highs there. Would like to see it break out, but we break out, the market starts moving higher. This could definitely be a combination of the best of both worlds. You have the technical breakout on the stock. You also have good fundamentals, and you have the breakout in the market. So you have the wind to your sails essentially here. And so on and so on. You can go through this list. You can go through these lists at any time and find these stocks super easy to help you find some good winning candidates. People spend hours upon hours upon hours trying to go through, lists of stocks they find on the internet or news articles or anything like that. But in actuality, you don't have to do that. I know everybody thinks that, the more time you spend on analyzing a stock or the more time you spend trying to find a stock, thinking that, you're going to be the first person to that, the better your stock is going to be, or the better your trade is going to be. And that's simply not true. I've found over the years here at VectorVest, the simpler your plan is, the less time it takes, the better your performance tends to be. And that's why I like to show these easy to follow, easy to use strategies that can help you reduce your time. So that way you can go out and spend time with your family, your friends, go outdoors and, get some fresh air every now and then, instead of having to spend hours upon hours upon hours, stuck behind a computer or stuck at home, going through 5-6 different programs or 5-6 different articles or news sites just to try to find that next hot stock. Peter, yes, this is the tablet. I did do it on the phone for quite a while. Finally got the tablet in, finally got it all hooked up, and it's hopefully a little bit easier for you guys to be able to see when viewing. But, you know, essentially it's the exact same functionality as what you would have with the phone or the mobile. But instead of having, you know, the overview, the My Stocks, the picks over here on the left, you just have those down at the buttons at the bottom, but you get the same information there. Simplify. Exactly. That is the best response I think I've ever seen there, Kathy. Appreciate that. All right. So if you guys have any questions, oh yeah, we'll take a look at the ETF sectors transportations. I said I was going to look at that. But if you guys have any questions on this, on, you know, what you're seeing or how to really get the most out of it, feel free to leave your comments or leave your questions in the comments here. Or if it's after today's stream, you can always give our support a call. They'd be glad to walk you through this same kind of information to make sure you're getting the most out of your VectorVest services here. All right, so with these are going to be ETFs. You know, they tend to follow the overall broad market. With the overall broad market moving lower, these are obviously going to be moving lower as well. This B-Dry down 11% here today. Let's take a look, see what it is. Not familiar with it myself. So the Breakwave Dry Bulk Shipping ETF. Okay, so it's looking at dry bulk shipping. Familiar with that. Not familiar with this specific ETF. Down here big. Is it leverage? Let's see. Daily change of percentage. So no, there doesn't seem to be any leverage with this one. And it's still down 11%. Not a good thing. Even with that though, look at the run that it's been on recently. You know, it's gone since December. It's gone from about $8 all the way up to $28. So yes, it's down 11% here today, but it's also up a few 100% over the last few months. So that 11% down day seems like a lot, but when you zoom out and take a look at the bigger picture, it's really not that much at all. Can this view be seen on the laptop? Yes, you can see all of this plus more on the desktop app there, Mario. All right. So hopefully I answered those questions. But yeah, looking at it with ETFs, always remember if you're interested in ETFs or you're looking into trading these ETFs, the main focus is always going to be RT, because ETFs are baskets of stocks. They don't have quarterly earnings reports, anything like that. They don't have financial statements. Therefore, their fundamental analysis of the RV and RS are always going to be pegged at 1. So when looking at an ETF, you only have to look at one indicator, and that's going to be RT. If the RT is above 1, it tells us it's in an uptrend or making us money. And if it's below 1, it's in a downtrend or not making us money, or that the ETF is not favorable at this time. So that's really as hard as we need to make it. When you're looking at this, if you're doing an ETF sector, you know, one of the things you could do is change the sort to RT. You're probably going to get pretty much the same results, maybe just slight changes here or there, but pretty much going to give you the same kind of information here. Can you look at stocks that can play on the chips shortage or even ETF? Yeah, you can look at pretty much anything. We track, what was it? Mark told me earlier, I believe it was 8,700 stocks. So yeah, you can do that on any stock out there. All of that there. All right. So with that, I'm getting a lot of people asking about stocks that you guys want to take a look at. I assume, you know, since this is a relatively simple strategy to do, to implement, you guys have a pretty good understanding of it so far. So let's get into the fan favorite, analyze your stocks, show you guys how fast VectorVest can make analyzing any stock at any time. Also, right now we only have 45 likes. Let's see, we got over 130 people in here with only 45 likes. Let's see if we can bump that like button up a little bit here today. If you guys are enjoying yourselves, if you guys have learned something here today, hit that like button, hit that share button. All of that, you know, helps me out. Once again, doesn't cost you a thing and really helps continue to grow this awesome community that we have here. So if you haven't done so already, make sure to do that. Now let's get into it. Let's take a look at some of the stocks you guys are interested in. So as always, just tap on the magnifying glass in the upper right. And then starting off, Jay's coming in hot with a bunch of stocks here today. Hey there, Jay. Glad to see you're not late today. All right, so looking at stocks. RT at 0.62 tells us that it is in a decline right now, therefore not favorable. This could be more of a speculative play or a pre-warning play or pre-prep play kind of thing, where it's not quite time to get into it yet. But, if the market does start moving south, this could be one we keep on our radar here. All right, let's see. SE&S was one that came in a few moments ago as well. Let's go take a look at it. Man, SE&S was one that I actually was in back around 80 cents a share. Sold out of it to get into something else at the time, and then literally the next day it went to, I think it was like $1.60, and then it moved up all the way to a high of almost $20 a share. I thought it was trading at like 19 at one point. Maybe I'm missing something. Maybe did they do a split? Something happened here. But yeah, I was trading at almost 19 a share. Just a few weeks ago. But just doing a quick analysis, this is more of a speculative play. They don't have any. They've gone through some trials, but they don't have any concrete, products that they're selling right now. So it is more of a speculative play. Therefore, you have poor long-term potential currently. You have a lot of risk associated with it. Because you've gone from that high all the way down to where it is now, you do have a strong decline or downtrend currently in the stock. Therefore, the stock is not favorable. Let's see. LAKE. LAKE, good long-term potential. Less risk associated with this stock. However, even with the best fundamentals, you still have a current downtrend. And as we always talk about, once you actually own the stock, the RT becomes the most important factor. So if you're not already in this stock, this is one to keep on your radar. Wait for that RT to pick back up. If you're already in this stock, RT being below 1 is a clear warning sign to either cut your losses now or, hold at your own risk essentially. Overall, it's a great stock, just not the time to be long in it right now. RBLX, Roblox, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable. ADM, good long-term potential, less risk associated with it. You have a nice steady uptrend. Overall, stock's favorable. ExtraApp, always bringing up ExtraApp. All right, ExtraApp, we'll talk about that. Poor long-term potential. You do have a lot of risk associated with it. It is in a steady decline currently. Overall, the stock is not favorable at this time. Actually, that is the idea to promote it in tablets. May have missed the question there. All right. Mara, let's go ahead and take a look at it. So Mara, average long-term potential, but it does have a lot of risk associated with it. Right now, you're in a sharp decline. Overall, the stock is not favorable currently. LPX, we just looked at that one. Come on, Jay, we just looked at those. Costco, there we go. COST. So Costco, good long-term potential, less risk associated with it. You have a nice steady uptrend. Overall, the stock is favorable. It's coming back. We looked at it a while ago. The RT was below 1 in that downtrend for a while, but we talked about it. This was one that had good fundamentals, but just the timing wasn't right. Well, now that the timing's right, hopefully you guys were able to capitalize on this one. GOLD, Barrick Gold, good long-term potential. However, it does have a lot of risk associated with it. You're in a steady uptrend. Overall, stock's favorable right now. LITE, good long-term potential, less risk associated with it. However, timing is just not there. 0.74, it is in decline currently. So overall, the stock is favorable, but we need to see that timing pick back up a little bit. Let's see. VSH, good long-term potential, less risk associated with it. However, timing at 0.84 does tell us that it is in a steady decline. Overall, it's a good stock, just not the time to be long in it. CTRM. So, CTRM. It has decent long-term potential. However, it does have a lot of risk associated with it, telling us that this is an aggressive stock here. It's in a steady free fall right now, so overall the stock is not favorable currently. Let's see, GPS. So GPS, poor long-term potential. It has a lot of risk associated with it. However, retail has been a hot ticket item over the last few months. 1.7, really strong short-term uptrend, making the stock favorable. It is a more speculative play. Anything in retail really is going to be a speculative play. Betting it's going to come back, especially after the pandemic. So this falls right in line, and you're seeing a really strong short-term momentum push higher. Hopefully we can see that last and help get some of these good names back on track and help them recover out of that pandemic phase there. All right, let's see. AMD, Advanced Micro, good long-term potential, less risk associated with this stock. However, timing is just not there. We've seen it happen a lot. Timing is of the essence, and right now is not the time to be in it. ACTG. ACTG, you have good long-term potential. You do have a little bit more risk associated with the stock, though. You're in a steady decline currently, so not the time to be long in it. Overall, the stock is a good stock. It's an aggressive stock, so just pay attention to the timing there. Let's see. XLY, S&P. All right, so looking at ETF, primary focus is going to be RT. 1.19 tells us it is in an uptrend, therefore it's favorable right now. All right, let's see. VXRT. Yeah, we can take a look at that. VXRT, poor long-term potential. It does have a lot of risk with it. It's in a steady free fall. Overall, definitely not favorable right now. BJ's Wholesaler, good long-term potential. Less or a little bit more risk associated with it, though. A little bit more inconsistency in their balance sheets, but you do have a nice steady uptrend. Overall, the stock is favorable. I know I'm probably going to get a lot of hate for this one. I know a lot of people like Costco. Personally, we signed up, little side story here for you guys. We signed up for Costco almost a year ago, I hope by this point, and it was because my wife, everybody talks about how good Costco is. She wanted to do it, and I'm not a fan, to be completely honest. I'd much rather go back to BJ's or Sam's than I would Costco. But that's just me. I do get it that their food section is supposed to be really good. I don't really use it for that, but I kind of miss the other ones here, to be completely honest. But yeah, BJ's nice steady uptrend. Overall, stock's still favorable currently. LODE. So LODE, you have poor long-term potential. You do have a lot of risk associated with it, making the stock a speculative play currently. Timing at 0.47 tells us it's in a steady decline. So overall, the stock is not favorable. Let's see. About more into Subhadra, yeah, that's a good rule of thumb, is to not load up with more than 2 stocks in a single industry. That's more of a diversification rule of thumb, but that's usually a good place to a good rule of thumb to follow, though. Let's see, LAC, poor long-term potential, a lot of risk associated with this stock. You're in a steady decline. Overall, the stock is not favorable. I'm really surprised I haven't seen one stock. I haven't seen Jay putting in a certain stock here today. Let's see if he'll get it put in by the time we finish up here. All right, grow GRWG. So GRWG, you have good long-term potential. You have less risk associated with this stock. Out of the marijuana industry, this is by far one of the top tier stocks in this industry. However, timing, the industry as a whole has had a sell-off. A timing of 0.50, you have a steady decline. overall, it's a good stock. They have some of the best fundamentals in that industry. We just need to see that timing pick up a little bit here. Where was I? IBM, poor long-term potential, does have more risk associated with it than the average stock out there. You're in a steady uptrend currently. Overall, the stock is favorable. Here we go. Jay's going to start putting them all in. All right. Marcus wants to take a look at REGI. Let's go ahead and look at REGI here. You have good long-term potential. You have less risk associated with this stock. So solid fundamentals. Unfortunately, though, the timing at 0.30 just tells us this stock is in a decline. Stock is a good stock. Need to see that timing pick back up a little bit. Crocs, let's go ahead. CROX. So Crocs, you have good long-term potential. You have more or less risk associated with this stock. You have a really strong short-term uptrend. So overall, this stock's definitely favorable here. Let's see. Etsy, ETSY. There we go. Etsy, you have good long-term potential. You have less risk associated with this stock. So pretty solid balance sheet overall. However, you did have a pretty significant drop here today. Timing is at 0.40, telling us it's in a strong decline. Stock's a good stock, just, not the time to be long in it. Let's see, CCIV. I'm seeing a lot of meme stocks coming in here today. All right, so CCIV, you got poor long-term potential. You have a lot of risk associated with it. You're in basically a steady free fall. Overall, the stock is not favorable here. All right, so that's going to do it here for today. Let's go ahead and start to wrap up things. Look at the homepage right now. We're still 2 ticks into the red. The market is still somewhat bearish. We still don't advocate buying any stocks at this time. We scroll down. Advances have picked up a little bit. 34% of stocks moving higher compared to the 30% we looked at when we started. Declines pulling back a little bit. They were at almost 60%. Now they're at 57%. So we've seen that 3% difference move from the decliners towards advances here. And actually looking at the major exchanges, the Dow is now being one of the best performers, up almost 0.4%. The Nasdaq's down about 0.4%. S&P is basically flat, up just shy of almost 0.1% here today. VectorVest Composite down about 0.6%. Overall, we have seen the major indices moving higher. We've seen a slight recovery or slight softening to this downtrend that we were noticing here today. But, it's still pretty early. We still have a lot of trading ahead of us. So we got to be patient and keep an eye on that. How do you get to that screen, the stock detail screen? Alan, so in the upper right-hand corner, you have that little magnifying glass icon. Just simply tap on that magnifying glass and you can type in any stock you want to. If I didn't get to one of your stocks today, I do apologize. If you're already on the VectorVest service, all you got to do is pull up your app, put in the stock, and you can get the same analysis. If you're not already on the VectorVest stock advisory or the VectorVest 7 platform, make sure to click on the link in today's description of today's video and sign up now. It's a 2-week free trial for the subscription or for the mobile app, and doesn't hurt. It's free. Doesn't cost you anything. Put it to the test. As the old saying goes, seeing is believing. So on that note, it's been my pleasure being with you here today. Thank you all for tuning in. If you haven't already hit that like button, hit that share button. Let's continue to grow this awesome community that we built here. And on that, take care. Have a great day. Have a great weekend. Next week, we will not be live, at least as far as I'm aware of, because I will be out of the office for the week. But we will be back the week after that. So if you aren't already liking the VectorVest Facebook page, you haven't turned on notifications, make sure to do that. That way you get notified every single time we go live. So until next time, take care, be safe out there. Have a great rest of your day. Bye, everybody.